Morning students, how are you all? Hope you all are learning your daily lessons. Okay, good. We are going to complete that ninth lesson. Only two more exercises available. I think that two exercise we can do later. Okay, or you can check whether you are able to do. If you have any doubt, you can clear in your intersession period. Okay, next Monday. So I am going to start the next chapter 10, depreciation accounting. You might have heard this word depreciation, opposite of appreciation, isn't it? That means something, the value is getting reduced. Here the fixed assets you might have studied, isn't it? There I might have told you when we studied the concept, matching concept, I might have explained to you. One fixed percentage of the depreciation will be reduced from the value of the fixed assets, and this depreciation must be entered in the books of accounts, or when we calculate the profit and loss account, we need to write that depreciation, and in the balance sheet we have to reduce the depreciation from the fixed assets value. The remaining amount is called the book value of the asset. Okay, so we know what are the fixed assets. The meaning of fixed assets we know very clearly. That business, in order to you that run the business, okay, or to start the business, for it to do the business operation, the firm or the organization will purchase the assets, fixed assets. They are the fixed assets. We can say some of the example. Maybe land we cannot say. Okay, land is a fixed asset very clearly, but it will not come for the depreciation, under depreciation, because the value of the land will never get reduced, but it will get increased on, isn't it? So land we should not calculate depreciation for land. So all the other assets we can say as fixed assets. For example, building, okay, then plant, machinery, then furniture, then any office equipments, motor vehicles, okay, then any other of that fixtures, furniture, for everything we have to calculate a certain percentage from the fixed assets, okay, as depreciation. Here these assets have long life, isn't it? That's why we say they are fixed assets, and we use in the business, for running the business we are using the fixed assets. So here a portion of the total cost must be transferred to the profit and loss account, and the same amount will be reduced from the value of the fixed assets in the balance sheet. Okay, so for this one we have to calculate the useful life of the asset, because the total value of the building will be divided by the useful life of the asset. Then we will get one percentage, one amount. That amount only will be used for calculating the fixed asset. So that we will learn the method of preparation of this depreciation. Before that we have to learn some of the terms in this lesson. What is the useful life of the asset? So what is the meaning? Useful life of the asset means how many years we are going to use this asset in the business organization. Okay, that means the number of years that we are going to use the asset in the organization, or how many years we are going to run that particular asset. That is called useful life of the asset. Then another heading, depreciable asset. What are the depreciable asset? I have told you all the fixed assets are depreciable asset except except the land. Land is not a depreciable asset because it does not have any depreciation value, only appreciation value only we have. Then we will learn the objectives. What are the objectives for providing depreciation? What are the objectives we have? Here, you have to find the true and correct profit or loss. Yes, because in the profit and loss account, we have to write all the expenses. So here we have to write all the expenses related to that year, only then the profit calculated will be exact profit. So that is one of the reason that we have to calculate depreciation, and we have to charge in the profit and loss account. In order to calculate the cost of the production or correct profit that is needed. Okay, then we can say the correct financial position. We never show the on the acquisition cost or purchase price. From the purchase price, we have to reduce the value of reduce the depreciation. Okay. Then sometimes the business organization, they will invest the same amount of depreciation somewhere, and at the end of the life of the asset of this present asset, they will sell that investment, and from that money they will purchase the new asset. So in order to purchase the new asset, they will invest this money, so that in order to replace the present asset, this depreciation, charging depreciation is very much useful. Okay, then for tax benefits, for any tax benefit also, because if they do not show the depreciation, the profit will be more, so they have to pay more tax. That is why for the tax benefit also we need to calculate depreciation. And even the Companies Act also says for all that before declaring dividend for the shareholders, they have to charge depreciation. After charging depreciation, the profit what they get, from that profit only they have to distribute a dividend. That means that interest, like amount that they pay on the share, that is called dividend. So before paying dividend, they have to charge depreciation. Okay, what are that? Around 5 objectives. Then causes of depreciation. So why the assets get depreciated? First one, wear and tear. That means nothing but the use. Okay, when we use an asset, a tangible asset, we get so when we use the asset, it will get deteriorated. That means the value will get reduced by its use. That is called wear and tear. Okay, if a machine is run continuously, its life get reduced, isn't it? That is called wear and tear. Next one, effects of time. Even we do not use, if time pass without using a particular asset, if the asset is kept idle, its life gets reduced, isn't it? We purchase one car and we just keep on the car park without using. Whether its life will be more? No. Even if we do not use that car, its life will be less, isn't it? Value will get reduced. That is called reflection of time. Then obsolescence. Here that means that out of fashion we used to say, isn't it? Because of the technological improvements, technological developments, some of the value of the asset will get reduced because of the introduction of new met- method of production or new technologies. New machineries will come into use, so the old fashioned machineries will become that out of date, that means out of use. It will not have any value. That is called obsolescence. Then inadequacy for the purpose. So sometime that the some of the assets use will not produce any purpose. Okay, so that asset, for example, a company may be producing 1,000 units per month, but one machinery will that capacity is only 10 units, so they will replace, it will not produce, it does not give any purpose for the company, isn't it? So that will get, that value will get reduced. Then any other lack of maintenance. Lack of maintenance, some of the asset, if we do not give proper maintenance and repairs, or that the use of those assets will get reduced, the life of the asset will get reduced because we have not given proper maintenance. But if proper maintenance is given, then we can use that particular asset for long period. Okay, so if it is lack of maintenance, the depreciation will get increased. Then some other abnormal factors also will affect the, maybe that will be a cause of depreciation. Abnormal factors, maybe the accident, fire accident or any other natural calamities that occur. Because of that also some of the assets may get damaged, or that cannot be used in the business for any purpose. Okay, so that's some of the factors. These are the causes of depreciation. This one they ask often. Okay, then what are the factors determining the amount of depreciation? What are the factors that determine the value of depreciation, the amount of depreciation? First one, the total cost of the asset. Actual cost or total cost. So you should listen carefully here. The total cost means that we can say this is the acquisition cost, acquiring cost. That means the purchasing price. Acquisition means purchasing. Acquisition cost, or we can say the historical cost, purchasing price. Okay, or constructing cost. Okay, it has many name. Okay, that total actual cost. Here when we purchase one asset, we have to spend some amount for erection. Okay, either for erection or for bring that particular asset to the company, that is freight, we can say. If it is brought through the train, that is called freight. Then to load the machineries, so loading charges, unloading charges, loading and unloading charges, all these must be added along with the purchasing price. That is called the total cost of the asset. Okay, the useful life means for how many years we are going to use a particular asset in the business organization. Here the Companies Act 2013 has given in the part C of section 123. Okay, section 123 part C has given this furniture and fittings has the useful life of the asset as 10 years, and building and plant and machinery has around 15 years. Okay, the next one, scrap value. What is scrap value? The value of the asset at the end of its useful life. Okay, for example, if we purchase a machinery for rupees 1 lakh and we use for 10 years, and at last we can sell that asset for 5,000, that 5,000 rupees is the residual value. So here we use some things and we sell that one in the for that man one who comes here in our house to purchase those things, that things that cannot be used, isn't it? So that value is called residual value. Okay, so now we will learn the methods of providing depreciation. There are 9 methods given. The only 2 methods we are going to calculate the depreciation. Okay, the other methods we are not using. Okay, the company organization may use, but not for our purpose. Okay, here the first one is straight line method. Straight line method, it is also called fixed installment method. Fixed installment. So from this onwards you have to listen carefully because you are going to learn the problems. Okay, then original cost method. Why this method is given these 3 names? Okay, straight line method, that means fixed installment, original cost method. Here they will consider only the original cost. Okay, and they will the residual value will be reduced, and that cost will be divided by the number of years, that means useful life of the asset. We will get one amount. Here if we draw in the graph, because here we will get the same amount of depreciation. That is why it is called fixed installment. Every month, every year we are having a fixed amount of depreciation, and we calculate the depreciation on the original cost of the asset. That is why it has got this name. Okay, original cost method, straight line method, fixed installment method. Okay, here that we will learn the formula. Okay, amount of depreciation, that is what we are going to calculate. Okay, you have to write like this: amount of depreciation is equal to, first one, original cost of the asset. Here the original cost means, I told you, actual cost. For that what and all we have to add. Okay, original cost of the asset means any erection charges or any loading charges, unloading charges, everything must be added along with the purchasing price. That is called original cost of the asset. Then from this one we should deduct the estimated scrap value. Okay, estimated scrap value, the value at the end of the life of the asset. Estimated scrap value, that we have to estimate at the time of purchasing. That is why. Okay, we cannot wait till the end of the life of the asset. We have to estimate. That's why it is given estimated scrap value divided by estimated useful life of the asset. The life of the asset also we are going to estimate. So estimated useful life of the asset. Okay, So we are going to calculate the amount of depreciation by this formula. Original cost of the asset minus estimated scrap value divided by estimated useful life of the asset. Then from this one they may ask us to calculate the rate of depreciation. Okay, what is the rate of depreciation? What is the formula? Here what we are calculating, that one you have to write up. Amount of depreciation divided by original cost of the asset, original cost into 100. We will get the rate of depreciation. Okay, with this we can do some problems. Okay, so first we should know what are the merits and demerits. What are the merits that we have from this method, straight line method or fixed installment method or original cost method. Okay, so here it is very simple and easy to calculate, isn't it? So total original cost we know, purchase price, we are estimating the scrap value divided by useful life. Okay, that it is very easy to calculate and easy to understand also. Okay, then that equality of depreciation burden, because throughout the life of the asset for 10 years or 15 years the same amount is charged to the profit and loss account. Okay, then at the end of the useful life of the asset, the life, that value of the asset will become 0. Okay, so that it is completely written off. Asset can be completely written off. All these points available in your book. Okay, I am simply explaining. Then this method is useful for the asset having fixed working life. So for which asset we can calculate the total number of years that as its life. For that assets this method is very useful. Okay, so only 4 advantages. What are the demerits? What are the disadvantages of this method? Here they are ignoring the actual use. Everything what we are doing, estimated scrap value, estimated life of the asset, everything we estimate, but the actual use of the asset is never considered in this method. And another one, here they are ignoring the interest factor. What should be, what they are ignoring? If the same amount is invested in some investment purpose, if we invest the same amount instead of purchasing the asset, if we invest the amount in the purchase of some share from the share market, we will earn every year or every month, isn't it? So that is ignored here. So no, nothing improvement, isn't it? So 20,000 or 1 lakh if we have purchased for a machinery, we are calculating and charging depreciation. So we never consider if we purchase this another asset for this 1 lakh, that amount will get increase, isn't it? That we never consider. Okay, then the scrap value is very difficult to determine, to estimate. Okay, how can for how much amount we can sell that particular asset after 20 years? After 20 years what will happen? Whether anybody is there to buy that machinery for 5,000, 2,000, we do not know, isn't it? So the scrap value, estimation of the scrap value is difficult to determine. Okay students, so we have learned the merits and demerits. Now we will learn I will do and show the problems. Okay, I will show the problem. Straight line method. Okay, only 2 method available, straight line method and written down value method. Straight line method 10 problems available. For written down again 6 problems. Okay, we have to do fast. So again we need to complete almost many lessons. Okay, the firm purchased a plant for rupees 40,000, erection charges 2,000, Effective life of the plant is 5 years. Calculate the amount of depreciation per year under straight line method. Okay, you take your book and turn to this exercise number 1. So here only the calculate the amount of depreciation. Exercise 1. Okay, number 1. Amount of depreciation. First you have to write the formula. Okay, you have to write fully. Original cost of the asset. Original cost of the, here plant given. So we can write plant. Minus scrap value given. No. Okay. We can write, okay, the formula we may not forget. So you write fully. Estimated scrap value divided by estimated useful life of the asset. Here the original cost of the asset, how much? Here 40,000 plus 2,000. Okay, then no scrap value, leave it. Divided by estimated life of the plant is 5 years. So 40 plus 2,000, 42,000 divided by 5. Calculate in 40 how many? 5, 8 5s. Then 20, how many 5? 4. So again you can write the depreciation, value of depreciation, amount of depreciation is equal to rupees 8,400. Okay. Then number 2. Company purchased a building for rupees 50,000. Useful life of the building 10 years. Residual value is 5,000. Find out the amount and the rate of depreciation. Okay. So first amount of depreciation. So original is original cost. Cost of the asset. Cost of the building. Or total cost minus scrap value divided by estimated life of the asset. Okay, here what is the original cost of the building? 50,000, isn't it? And a scrap value 5,000 divided by estimated life of the asset 10 years. So 45,000 divided by 10, 4,500. Then rate of depreciation, you write fully. Okay, rate of depreciation, amount of depreciation, original cost into 100. What is the amount of depreciation? 4,500. Original cost 50,000. Isn't it? Into 100. So 40, 1, 2, 3, 4, 1, 2, 3, 4. Here 5, here 9. So 9%. You have to write the percentage. Here rate of depreciation. It is very easy, but you have to do it carefully, the calculation. Okay. Then third one. Furniture was purchased for 1 lakh. Okay, it is expected to last for 5 years. That is the useful life of the asset. Estimated scrap value at the end of 5 years is 10,000. Find out rate of depreciation. If rate of depreciation is asked, first we have to calculate the amount of depreciation. Every time you got to write the formula clearly. Okay. Original cost minus scrap value divided by useful life. Original cost 1 lakh. Scrap value 10,000. Useful life 5. So 1 lakh minus 10, 90,000. 5. So how much? In 9, 1, 5, then 48. 18,000. Okay, then rate of depreciation. Fully you write rate of depreciation. What is the formula? Amount of depreciation divided by original cost into 100. Amount is 18,000. Original cost is 1 lakh into 100. Here 50. 1, 2, 3, 4, 5. Like this only you have to cut. Okay, like this you should not cut. 50. Here 1, 2, 3, 4, 5. So what is remaining? 18. You write as percentage. 18 percentage. Okay. Then fourth one. So just listen and do all these problems in your notebook. If you don't understand, you ask me. Okay. Then next one, calculate the rate of depreciation under straight line method. For rate, we need to calculate first amount of depreciation. Write the formula. Original cost minus scrap value divided by useful life of the asset. Okay, original cost. You see, purchased a second hand machinery on 1/1/2018 for 38,000. Okay, so 38,000 is there. Then 1/1/2018 spent 12,000 on its repairs. If we purchase one second hand machinery and we do that repair, that should be added along with the original cost. Okay. Now this is the original cost minus scrap value 6,000 divided by useful life 4 years. So 38 plus 12, 50,000 minus 6,000 divided by 4. 50,000 minus 6, 44,000 divided by 4. Okay, so 11,000 is the amount. They have asked us to calculate the rate. Okay, rate of depreciation. Amount of depreciation divided by original cost into 100. Okay, here amount 11,000, original cost 50,000 into 100. 40, 5, 2 5s are 10, balance 1, 10, again 2. So 22% is the answer. Okay. Then I will read the problem. Machinery was purchased on 1st January 2015 for 4 lakh. 15,000 was spent on its erection and 10,000 on its freight charges. Depreciation is charged at 10% per annum on straight line method. The books are closed on 31st March each year. calculate the amount of depreciation on machinery for the 2 years. Okay, so that amount of depreciation for the first year. Okay, when they are purchasing, when our books are closing 31st March, when they are purchasing 1st January 2015. Okay, 31st March, amount of depreciation for 2000 1st January 2015 we are purchasing, but when it is ending 31st March 2015. Okay, here that estimated life is not given, only percentage is given, rate. So original cost into rate by 100 we will get the amount of depreciation. Okay, if they have given the amount here 4 lakh is there, isn't it? 4 lakh, then 15,000 we are spending for erection, 10,000 we are spending for freight charges. This must be added along with the purchase price. Okay, so 4 lakh 25,000 is the amount, isn't it? 4 lakh 25,000. What is the percentage? Now percentage they have given. Okay, 10 by 100 into how many months? Here we are calculating when they are purchasing the machinery 1st January, only for 3 months. So 3 by 12. Okay, we are purchasing on 1st January. So January, February, March, only for 3 months. So we need to calculate. Okay, here 1, 2, 1, 2. Here 3, 1, 3 is 3, 4 3s are 12. Again 4, 1, 4 is 4, then 0, 24, 25. How many 4? 6. 6 4s are 24. Balance 10, isn't it? 10, 2 4s are 8. Balance 2, 25. So 10,625. Okay, then you have to write depreciation for 31st March 2016. Okay, here the same amount. Okay, 4,25,000 into 10 by 100. Here no month, we are 1 year. Okay, so don't write that month. So simply 1 2 1 2. So what is coming remaining? 42,500. That is the second year. This one, if they have given the cost and the rate, we have to calculate the amount of depreciation in this method. Okay, the ordinary method. But if they have given the scrap value and they have asked us to calculate the amount of depreciation and the rate of depreciation, we have to use the formula and do. Otherwise simply, okay, total amount into percentage, 10 by 100 into how many months. Okay, then sometimes they will ask us to write the journal entries also, that we will see in the next class. Okay students, so you read this one and try to do these problems in your notebook and keep ready. Then in the next class I will mark the question answers. Okay, thank you students.